Greetings, everybody. Welcome to Liberty Call. Today is Friday, March 31st, 2023. Hope everybody's having a fantastical day out there in the interwebs. Pretty nice day here in Colorado. It's a little on the chilly side. I think it's in the high 30s, maybe low 40s. Yesterday it was up in the 60s. It felt like summer. I had shorts on, and the wind was a little chilly, but being outside in the sun felt awesome. Anyways, the wind is really ripping through here today. We got red flag warnings. What that means is the wind's so high it could spark, and the humidity is really, really low, which, that's common here. So it could spark forest fires, and then you got to worry about having to evacuate and all that good crap. So everyone on the front range is on pins and needles today. So, all righty. Well, looks like the markets look like everyone's in a good mood today. Lots and lots of greens across my screen here. So let's, without any further delay, actually stop. I always forget this. If it's your first time watching Liberty Call, please hit one of those subscribe buttons, follow, share, all that good stuff. Give me some big old thumbs ups. I like that. So, all right, now let's go ahead and jump into the numbers. All right, Dow Jones was up 1.26%, 415 points, closed at 33,274. S&P 500 was up 1.43%, closed at 4108. NASDAQ up 1.74%, closed at 12,221. The VIX fell 1.68% today. It's currently at 18.7. Canada was up 0.8, Brazil down 1.75, Mexico down 0.49. Over in Europe, Germany was up 0.69, UK up 0.15, France up 0.81, Netherlands up 0.49, Spain up 0.28, Italy up 0.34, Switzerland up 0.67, and Portugal up 0.36. In Russia, both exchanges were red, MOEX down 0.62, RTSI down 0.96. And the Asian markets overnight, the Nikkei in Japan was up 0.93. Australia was up 0.78. New Zealand down 0.29. In the Chinese markets, the Shanghai was up 0.36. The Shenzhen Component up 0.64. China A50 down 0.1%. DJ Shanghai up 0.42. Hang Seng up 0.45. Taiwan weighted up 0.12. All right. So like I said, I guess people are feeling better. I'm not sure why. I mean, it looks like it's like Thelma and Louise, and they're getting ready to drive off the cliff. And, the folks in the car are like, we're good. We're good. But again, hey, I could be completely off base. I mean, I could be looking at the wrong stuff, but I doubt it. The smart people I listen to have been right about most of this crap the last 4 or 5 years. So I don't know. I mean, you could continue to listen to the talking heads on TV. They usually give you the wrong news. I mean, just think about coronavirus, inflation being transitory. I mean, those are just some of the quick ones. But hey, anyways, I could be wrong. All right, well, let's go ahead and take a look at the how the markets did for the week. Dow Jones starting out was up about 3.03% for the week. The S&P 500, 3.16 was up. NASDAQ was up 3.05. So all right about that same range, just between 3 and 3.25. The Dow transports were up. I'm sorry, these are the utilities, were up 2.71, and the transports were up 4.95, so almost 5%. So that was the leader for the week. So again, people think things seem to be getting better. I'm not quite sure what they're looking at, but anyways. All right, let's go ahead and look at the longer term trend going back to the beginning of January of last year. Again, we can see the longer term trend. We did see a break in that trend in early January, but it has kind of petered out on this first occasion here in early February. And then, it's got a little bit of steam here. Let's see when that started, about mid-March. And, we'll see. Again, I think it's going to continue to follow this trend line down simply because, all things being equal, all the other things that created this problem are still problems, whether or not it's inflation or just the overspending in the government. I mean, all the things that created the inflation, that have created this malinvestment in our economy, that still hasn't been fixed. So, I mean, you could slap a Band-Aid on it with more quantitative easing if the Federal Reserve decides to pivot here in the next couple of months and freeze interest rate increases, or if things start to get really wobbly, The dangerous thing is that they'll start slashing rates and doing more money printing and quantitative easing, which again, I've talked about this a number of times. Every time they do it, things seem good in the moment. Back in 2009 and 10, when they were doing all the stimulus because of the housing crisis, that was, things felt fine for a while. I mean, it was slow growth and such, but a lot of that could be blamed on, the administration who was in place at that time, Black Jesus. And, he was not exactly a business friendly guy. So I'm not exactly, going to point all the blame, at, the whole administration, but, it's just a mess. You can see what happened in the last, in the 4 years before Biden, things seemed to be much better. But again, we still had all the same problems, reckless spending and, the keeping rates artificially low for a long period of time. It wasn't until the end of Trump's term that they actually started cranking those up and then had to, reverse before Corona even started. So, all righty. Well, that's my soapbox about, oops, I hit the wrong button. All right, let me get up here and we'll look at the economic data for the week. There we are. All right. U.S. initial jobless claims came in at 198,000. The forecast was 196. Last week's number was 191, so a slight increase. Continuing jobless claims were this week 1.689 million. Forecast was 1.697 million. So below forecast, which is good. Previous number was 1.685. So bumped up by about 4,000 from the week before. All right. The consumer confidence survey came out this week, came in at a 104.2. Forecast was 101. Last month's number was a 103. So again, whoever was pulling this data or whoever they were surveying seemed to have a better feeling about things recently. U.S. GDP for the fourth quarter, the final number came in at a 2.6%. Forecast was 2.7. And if we look back here at the revisions, when Q4 first, we started out at a 2.9, went down to 2.7, and then the final number is now 2.6. Q3's finalized number started out at a 2.6 and was finalized at a 3.2% for Q3. So, again, some people would point to that and say, hey, things are pretty good. Look at how the end of last year was, but, I'm not so sure. All right. The PCE Price Index year over year grew by 5%. Forecast was 5.1. Last month's number was the previous number was a 5.3. So did recede a little bit. The month over month number was a growth of a 0.3. Is that right? PCE? Yeah, that's the year over year. And this is the month over month. Grew by 0.3. The forecast was to grow by 0.5. So, it's kind of like the inflation numbers on, the CPI, the consumer price index and those things, say, oh, look, it went from 7 to 6.5. And it's like, well, it still grew month over month by, 0.5% or 1% or whatever it might be. U.S. personal income month over month grew by 0.3%. The forecast was a 0.2. Previous number was a 0.6. Personal spending grew by 0.2%. Forecast was 0.3. Last month's number or previous number was a 2% number. All right. And last bit of data, U.S. Michigan consumer sentiment came in at a 62. Forecast was 63.2. Last month's number was 63.4. So it looks like from this confidence survey, things are, beginning to slide a little bit. We peaked out in, February. So. All right. Well, that's everything I have there. Let me go ahead and bring up today's market recap. S&P 500 rises as tech rally keeps stocks on track for strong quarterly gains. All right. Let me get my notes here. All right. The S&P 500 continued its upward momentum on Friday, heading towards a strong first quarter of gains led by growth stocks, including technology companies. The rally was supported by a dip in Treasury yields, which were pushed lower by signs of cooling, but still elevated inflation. The core personal consumption expenditures price index, the Federal Reserve's preferred inflation gauge, rose by 0.3%. We just covered that. In February, just below the expected 0.4%. A closer look in at the data showed that core services ex-rent component increased by 0.27%, the highest since July of last year. The U.S. 10-year yield fell 5 basis points to 3.51%, providing support for the growth sectors of the market. However, it is expected to remain range-bound, with analysts at Janney Montgomery Scott stating that it remains stuck in a broad trading range with 3.3% as support on the 10-year and initial resistance at 3.6%. Tesla was the biggest gainer among consumer stocks, rising more than 5%, followed by CarMax and Caesars Entertainment Corporation. Technology stocks were on track for a 20% rise in Q1, were lifted by a rise in Alphabet and Apple, while semiconductor stocks underpinned the broader move higher. NVIDIA Corporation rose more than 1%, adding to the 89% gain seen in the quarter, with the chipmaker expected to benefit from strong interest in generative AI that is expected to boost its chip demand. On the earnings front, BlackBerry's narrower than expected loss overshadowed revenue that missed Wall Street estimates, sending the share price more than 15% higher. That isn't that crazy? Elf Beauty also jumped more than 3% after Morgan Stanley upgraded its price target on the cosmetic company to $94 from $75, citing favorable Q1 sales data. In other news, Virgin Orbit Holdings sank 40% as it announced it would be shutting down operations and cutting about 90% of its staff after attempts to secure funding failed, despite turmoil in banks, which has subsided somewhat after the Federal Reserve and U.S. government stepped up to support the industry. The broader market has seen strong quarterly gains. Yeah, helping out their buddies in big business. You know, if it was you or me, they wouldn't give two shits. All right, and then I got two more articles here. They're basically, following the same subject. The first one is Petrodollar Dusk, Petro-Yuan Dawn, what investors need to know, and Petro-Yuan and Petro-BRICS, the need for better alternative reserve currencies to break dollar dominance. The first one comes from Forbes. The other one comes from Forbes India. So that's where I pull these two articles. Let me bring up my synopsis here. All right. The two articles discuss the potential decline of the petrodollar, which has been in place for over 50 years. The petrodollar is not a real currency, but rather the use of the U.S. dollar for trading oil. The U.S. government provided economic aid to Saudi Arabia, its main oil-producing rival, in exchange for assurances that Riyadh would price its crude exports exclusively in the U.S. dollar. And other members of OPEC followed suit. This had the immediate effect of strengthening the U.S. dollar, which became the world's reserve currency, a status previously enjoyed by the British pound, French franc, and Dutch guilder. However, more and more countries are now agreeing to make settlements in currencies other than the U.S. dollar. During Chinese President Xi Jinping three-day state visit to Russia, the Chinese yuan was named as Putin's preferred currency to conduct trade in. Russia, Iran, and Venezuela account for about 40% of the world's proven oil fields, and the three sell their oil in exchange for yuan. Other major OPEC nations and BRIC members, such as Brazil, Russia, India, and China, and South Africa, are either accepting yuan already or considering it. The yuan's role as a reserve currency will continue to strengthen, signifying a broader shift in the global power balance and potentially giving China a bigger hand with which to shape economic policies that affect the world. Gold has also increased as a foreign reserve, especially among emerging economies that seek to diversify away from the dollar. Russia announced that its bullion holdings jumped by approximately 1 million ounces over the past 12 months as its central bank loaded up on gold in the face of Western sanctions. The implications of the dollar potentially losing its status as a global reserve are numerous, including currency risks and rising interest rates, but it could present opportunities for investors in commodities such as gold. All right. So, yeah, I mean, we are watching a slow motion death of the U.S. government, the U.S. dollar. So, again, I'm just sharing this with you. Don't be surprised. Plan accordingly. Have your hedges in place, because if, crap goes sideways, you don't want to have to be, bartering chickens for stuff. So you might want to have, some other form of wealth that could get you through, a short stretch until things settle down. But I don't see, everyone knows my point of view. The U.S. government is not the good guy in the world. They are the world's leading terrorist organization. And, when it collapses, I'm going to be very, very happy. I just hope there's enough people like myself who are willing to, provide some retribution to the assholes who've done this to us. So anyways, all right. Well, that's everything I had for this week. I hope everyone has a fantastic weekend. We got more baseball. Astros didn't win yesterday, lost 3-2, but it was a good pitching, good pitching on both sides. And it's a long season. So, good game. And unfortunately, it was on ESPN. I had to listen to those yahoos talk and not my regular folks, Blummer and TK and Julia. But anyway, so again, hope everyone has a great weekend. Final Four is going to be Saturday and Monday. And then, like I said, we got baseball all weekend, and I'm sure there's other fun things to do. And, get outside. It's springtime. If you're down in the South, it's going to get hot in a few months. Get out, go for some walks, go have some fun. But anyways, all right. Well, hope everyone has a great weekend. I'll talk to you next time. Adios.